as well. So, and of course, we have in less than 30 minutes from now, no, well, I'm talking about in less than 7 minutes from now, we have the one of the most important US data for the Fed, the PCE. So, let me share the calendar as well. And give me a second. I remind you that you can stick on the comments section any questions that you have. We are here to help with anything you need to analyze any asset that you want us to analyze, any questions that you might have. So let me share for a bit the calendar just to see. So Chrome calendar, here we are. So this is the well expected PCE number. This is one of the most favored data for the Fed. So the expectations for March come like present a lower number, that some from in comparison with February, something that could be quite positive for the US economy, for the dollar. So it remains to see, however the final numbers in few minutes. So I would like to remind you a bit what happened yesterday and where we are, how the market is traded right now. So hello Andriaku, hello, welcome. So let me just take out the box. So let me also have the dollar index in front of me. That's the daily chart in an aggressive rally since the beginning of March. But let's get to the 30 minutes chart. So, as I was about to tell you, until the data are out, we have seen a pullback. We have seen a pullback of the dollar so far today. Actually, since it peaked from the 103, let me just be precise, 103.90 level yesterday. So the reason for this reversal is a comp of things. So it's the month end, is the anticipation of the Fed next week, and this uncertainty around how aggressive Fed could be next week. But also is the bit of a disappointment, if we could say, on the GDP numbers out of US yesterday. So that's why, but mainly it should be the month's end, as I mentioned, in the week's end. So that's why we have seen this pullback down to 102. Let me just have a line on 102.78 to be precise, of the dollar losing some ground. So it's a comp of things, as I said. So we have nearly 90, 100, no, 70, 120 points decline. So in regards to the GDP yesterday, why they have been actually significant is due to the fact that they have raised some concerns. Okay, they have raised some concerns in regards to the U.S. economic growth. So far, we had a pretty nice and good economic growth picture from the US so far. So it's one of this pop that we have seen yesterday for the GDP, and the negative 1.4% GDP number for the first quarter has raised some concerns in regards to the growth, whether it was one off or something in the US, and whether we will start seeing slowdown in the US economy as well. So that's why today's PCE number is so important, okay? Because it will give us it will give us a hint in regards to Fed next action. Even though we know actually the market's overall pricing in 50 points rate hike for the next week, another 50 for June, and another 50 for July. So 150 points rate hike is expected, is pricing into the market for the next 3 months. But that there is a question mark on that, because if we've seen a negative reading today, if we see a spike of the PC, that could be a very, very scary situation, a very spooky situation, and it might shift Fed and more cautious and not so aggressive as it was so far. But okay, I'm gonna wait for another 2 minutes to see the data before we discuss anything else, okay? Because this is just assumptions. So in regards, okay, 2 minutes to go until the data. I would like to remind you that overall we had, as we said, overall today we had a bit of a bit of pressure on the dollar, the pound. So I have pound, 1 hour chart, pound gained some ground, or euro. So let me just, excuse me, 1 hour chart initially gained some ground on the weak dollar, but turned back because anyway in the European in Europe, we have a lot of uncertainty. We have the Western sanctions and all the impact that has on the European economy. We had seen some very disappointing data from France and Germany this morning, adding pressure to the ECB. We have seen German GDP growth coming at 0.2%. Mainly COVID restriction is something that we should blame for this reading. We had seen French, as I said, we have French GDP also stagnate this morning, unexpectedly stagnate. Also, COVID restrictions are partly to blame. We have seen German inflation jumping to 31.2%. 31.2% in March. We are seeing that the inflation is getting hotter and hotter and hotter in Europe, and all this is adding is bringing ECB to an even more difficult situation that it currently is, and is adding further pressure and might continue adding further pressure to the European assets and to the common currency. The only thing that supported so far today the market, it was the earnings that they managed to overshadow the concerns, the growth concerns. So we had a pretty we had Meta spiking and exceeding expectations, so that helped Nasdaq and in general the US futures. So data should be out now. I haven't scanned through your questions yet. I know that you're asking about gold. I'm good, thank you, Shahid. Hello. Gold. Yeah, I know that you keep asking about gold. Give me a second just to let's check together the data, okay? And once we check the data, I will start checking with you the assets. By the way, it would be very useful if there is a particular time frame that you want me to check. Okay, just saying. So let's get to the calendar. Let me share it as well. Come on quickly, economic calendar. Okay. So the core price index on a steady at 0.3%, so in line with expectations. So the yearly basis declined 5.2%, and personal spending rise at 1.9%. So it's not a disappointing. Let me get back to the MT4 as well. T5, sorry, T5 as well. So here we are. Perfect. So it's not a bad reading. It's more of a steady firm, to be honest. So the headline, the year number, slightly lower. All the rest remains unchanged. The spending increased, so that's a bit positive. So yeah, it's definitely not a bad report, but it's a bad data out of US this afternoon. So it's not something that could affect significantly Fed's stance next week. So we have dollar index over here in a 30 minutes chart. I will keep myself up to date with the breakdown, even though I can see that. Okay, personal income increased slightly, personal spending also increased slightly. Let me check a bit the breakdown down, guys. Give me a second. So the core, the monthly core is the same. Okay, okay. So pretty fair, isn't it? So that's adding to the inflation courts. More expensive to employ people. Employment cost 1.4%. Is this on the breakdown? Yes, it should be on the breakdown. Let me just check, guys, if it's the data. Yeah, so then the calendar employment. Oh, here it is. Okay. So US first quarter employment cost at 1.4%. So the first quarter, okay, guys, something that we don't have in our calendar. That's why I didn't share it earlier. Now I understood that Stuart mentioned to me. So something that is not I haven't shown you is that along with the PC, we had actually the first quarter employment cost. So literally, what that means, it means how much it costs to have an employee. So the cost, it is what it is, employment cost index. So it seems that this index has increased from 1.1%, and it was expected to 1.4%. So this is the first quarter wage and benefit cost data, which has increased. So that means that this is a number that could add further. We will see that it will add further to the inflation, to the hot inflation figure, because it costs, because employing people, okay, it gets more expensive than before. So this is what this index is. So this is something negative. Not sure how much it could affect the employment market, the labor market in the US, but this is something that it could consider negative for the employers in the United States, and it could affect inflation. Yeah, we cannot really tell how. What would be the impact on the labor market yet? But yeah, that's definitely something negative for the labor market in the United States. Okay, so let's get back to the dollar index. I want about Nasdaq. Okay, let me start with dollar index because it was all about the US data, and I will shift to Nasdaq and gold since I can see that you are mostly interested in those two. So we had seen anyway a bit of a rebound the last three sessions. This is a 30 minutes chart, okay? Rebound in the last three sessions for the dollar index, recovering nearly, I think it should be somewhere close to 50%, is it? Yeah, it is. It's actually exactly at the 50% recovery from yesterday's losses. And we can see that it's keep pushing higher after the data. So anyway, as I said, the PC wasn't that bad. The only thing that it looks to be bad from this breakout from today's data is the employment cost and the fact that it increased. So we need to keep ourselves up to date with the labor, with the initial jobless claims next week and the upcoming next week, sorry, and and with the NFP as well, which it will be, if I'm not mistaken. Let me just double check. Yeah, it will be next week, next Friday. So let's see whether this employment cost affects or not the NFP next week. So just for your own information. So as I was saying, we can see the dollar getting back on track, trying to recover some ground from the losses that we have seen since yesterday afternoon. Already breached and broken the 50%. That's the meat of the losses that we have seen since yesterday. And in general, the intraday picture, it provides some kind of a strong rebound. You can see that they're full body candles, like really strong candles, stochastic pointing higher, RSI cross 50 and pointing higher. The only indicator that hasn't turned yet is the MACD, but this is not applied for the 30 minutes chart anyway. And a breach and a break of the asset into the upper Bollinger Band area. So that means a move above 103.40. Okay, so remember this is the hourly chart, so we need to see this candle closing above this level. Then this will indicate that they will return. It could retest the highs that we have seen yesterday. But yeah, let's wait and see. Yeah. Stochastic still pointing higher. As I said, RSI still pointing higher. So technical indicators along with the bullish cross of the fast moving average as implied to a positive to the continuation of this boost that we have seen in the last 1 hour and a half. Now, there's nothing really to say in regards to the daily chart. It has been in rally since the beginning of the year. It's everything has to do with the expectation, the speculation that the market is doing about the Fed. And as I said, the Fed is expected to proceed with 50 points in a rate hike next week. And with the PCE out today, not like raising any concerns, this is even more likely than before. So the dollar is the daily chart. Sorry for shifting it from one daily time frame to the other, but this is the daily chart. So I need to put the weekly just to see where our next medium term resistance level is. The asset has already breached actually it was just a breath away from 104 round number level yesterday. We're in an aggressive rally for a year now, right? And in order to identify the next resistance level, I need to go as high as a monthly chart, and that would be still impossible. So, just okay, no, can't. So, this is the 20 years highs, 20 years peak. So, we can actually use Fibonacci extensions to identify the next resistance areas for the dollar index. So the next resistance areas for the dollar index lie on the 104 round number and the so far peak, and the very next it lies to the 123% Fibonacci extension at 105.36 level. Okay, so that's in the medium term. So nothing to do obviously with the short-term time frame. So let me zoom in a bit and let's shift to gold. Actually, first come first served, and I think the very first person that asked about an asset, it was Riagu. Yeah, USA 100. So, you mentioned, so you have Nasdaq over here, dear. So remember, Nasdaq it was one of the leaders, especially this week, on due to the earnings. Even though we are facing a bit of a mixed earnings season, um, overall we could say that the earnings are more to the positive than to the negative. We had a quite good earnings season, but a bit mixed. But yesterday one, and at least for the big giants such as Meta, Facebook, one, Amazon and Apple, even though they have presented some a bit of a miss on the revenue, they have overall beat expectations for the first quarter. That's why we had seen yesterday. This is the Nasdaq that we asked. That's why we had seen initially. That was on the release of the Meta earnings. We've seen a boost and more or less a consolidation so far today for Nasdaq. So where we're standing. A bit consolidation so far today, directionless. And if I'm not mistaken, that we had actually AstraZeneca reported today already. We had Exxon and Chevron. I think they already reported, and there is nothing significant. Let me just double check for you. Let me check whether there is anything. I think there is nothing really, not at least from the big giant, from the giants that they will report after the market close today. So let me just have a quick look for you. Because yeah, ExxonMobil already reported, Chevron already reported, and after the market close, so after the market close, let me double check. No, nothing really. Okay, let's get back to Nasdaq. So as I was telling you, is in consolidation in the very last trading day of the month. Is Friday anyway. So it is moving sideways. You can see that the this is the 1 hour chart. Just to remind you, Nasdaq. Maybe it can help you if I had that on. No. Okay. No. So consolidating MACD, RSI, and my fast moving average all flatten. We can see Bollinger's getting shrinking, right? Something that adds to the consolidation scenario as well. So a bit steady so far today. Okay, nothing really exciting in the near term, but in general, the stock markets. Let me just put the daily chart on. Okay, we put the daily chart on. We have seen the stock market to the downside since the beginning of the month of April. Let's not forget that an aggressive tightening of the monetary policy implies to pressure on stocks. So appreciation of the dollar, appreciation of the bonds, but pressure on the stocks. Okay, so and this is what we have seen for the whole April, regardless, unfortunately, from the earnings season and whether the earnings season was positive or negative. We can see that Nasdaq over here, and I will put a channel on. Let me get rid of some lines, but we'll put a channel on to see that, not for you to see that is still following. Come on. Yeah, here it is. Still following and downwards channel since the beginning of April. So here we are. So below the 20-day moving average for nearly 3 weeks now. Within a descending channel, MACD negative, RSI failed to rebound to move above 50 level. We have some ups and downs. We have some near-term rebounds, but that's it. The current outlook for the stocks remains to the downside, and this has mainly to do, and not with the earnings season, but mainly has to do with the aggressive stance from the Fed and the expectation for the 150 rate hikes for the next 3 months. Now, let me get back to your question. So, just to summarize a bit the Nasdaq outlook, dear Andriaku, the medium term remains negative, while in the near term, in the intraday basis, intradays, we can see consolidation in the very last, this Friday, actually today. Okay, so that's pretty much it. So let me check any further questions as well. Gold, obviously gold. Okay, guys. So So gold from, yeah, you keep asking about the Shahid. Okay, gold support resistance short and long term. Okay, so let's start from the short term then. Okay, so gold. Gold had a bounce this morning, not literally since the beginning of the day, but it's currently facing some pressure. So this is gold. Let me just okay. These are the lines that you have seen with Stuart yesterday. I will explain again what these lines are. So we are in gold in 1 hour chart right now. Okay, and you can see that the gold managed to recover some gains, not significant, but it managed to break and remain above the 1900s territory. Territory this today on Friday. Why? For 6 hours in a row, it has steady moving sideways uh, between the 1910 and the 1920 territory. So sideways, intraday outlook remains positive as long as we don't see the asset turning below the, sorry, I will put another line on. It might be a bit confusing, but this is my latest. Can you see this latest up fractal? And also, this is a level below my 23.6 Fibonacci level. So a break below the 1905 could be the very, very first hint that we might see a pullback for gold in the near term. So for the time being, is sideways for 6 hours in a row. We have a really big candle the last hour, but it hasn't closed yet. So I might revert. I might get back to gold in 10 minutes, okay? Because I would like to check together how this candle end up. So I will shift a bit to the daily chart just to see together what's going on. So clear a bit. So here we are. Once again, this week, and was the case since February this year, we can see gold failing to move below 1870 territory. So that's a very important floor for gold. You see, it was retested once, it was retested twice, three times, and now it's the fourth time that is retesting this 1, 2, 3 months support level. So if we what we can see from gold over here, it's more or less a sideways movement for the last 2 months. So bouncing from 1880 territory to 200. So overall, it remains in a sideways movement. Now, in regards to the daily chart, there is not a rebound signal yet. We have seen, of course, some kind of a recovery the last 2 days, so yesterday and so far today, but that's not significant because because the asset remains at two weeks, no more than, sorry, more than uh, remains close to 1 month low. So if I put my Fibonacci again on this down leg, you can see that it hasn't confirmed. Let me zoom in a bit. And you see that it hasn't confirmed a decisive closure above the 23%. So for gold to be rebounded and to turn to the upside, to turn this downwards outlook into an upwards one, into a positive one, we need to see um, the daily candle closing above the 2926 territory, 1926 territory. Okay, so we need a decisive move and closure above this level in order to identify a potential rebound and a return back to the April's highs. So for the time being, this rebound looks just a bit of a correction on this down leg. Why is that? Because as you can see, MACD remains negative. Okay, actually is ready to cross the histogram has already turned negative. The signal line is ready to turn below zero. Hasn't really turned yet. RSI shows some some how can I say that, some short-term rebounds, but is still in a downwards trajectory. So if I you it's very useful to add some trend lines on your indicators as well. So that was the peak, right? So can you see at RSI, despite any fluctuations that we have seen, he has so far it has created some lower highs. So that is in line with the come on with this descending triangle that we are seeing from the gold as well. So that implies that momentum is decreasing. Okay, momentum is decreasing, and this as I said, these 2 days rebound look to be just a correction for the time being. So to summarize all this, dear Shahid, both medium term, so the daily chart, and intraday one, they remain negative for gold. So that's a massive candle. We have another 5 minutes to go before it closes. Okay, but you can see that it broken already 6 hours support level. So let's wait and see. Let's wait to see how it will close. You ask for support and resistance levels. So obviously, one of those, it was that one, the 1910. Resistance level in the short term remains this double top that we have seen in the last 2 hours, which is it stands at 1919 level. Let's round it up because it's 1919.77. So that should be 1920, just to round up a bit. So immediate resistance level stands at 1920. Next support level in the short term is down to, it was in my upper fractal, or the 20 period moving average, which is this is the area 1905, 1903, and a break of that could open the doors down to yesterday's bottoms, with the 1884 to be a key support area because it's a confluence of my Bollingers and this continuous floor that we have seen for more than 10 sessions in a row yesterday. Okay, so if the 1903 breaks, the next support level is down to 1884, dear Shahid. Now, in the daily chart, support level is what I initially said. It's the 1870 territory because it's 3 month support level. Okay, that's a key support level for gold. To the upside, then you should consider, as I mentioned, the Fibonacci levels and the 20-day moving average. So that means, so in this case, the 20 period moving average coincides with the 50% Fibonacci level. So that makes this resistance level an even more significant one. So that is up to 1935. So hopefully I gave you all the support and resistance levels that you need, dear Shahid. So let's move on. Hi everyone. I like that you have interaction. There's interaction between this community, guys. We have this. I replied, Kabir, in regards to gold. Hopefully, I replied to your question. What will expect? I'm not sure whether I think it's run out of steam. To be honest, let's wait to see. Let's wait. We have another 3 minutes until this candle closes. Okay, so I will get back to you. How to know when to place the right trade? That's a big. That's an important question. But first of all, you need to clarify what kind of trader you are, my dear Peter. I think you have been here yesterday with your session. It depends what kind of trader you are, whether you are a long-term one, a medium-term one, intraday one, scalper or not. So so each one regardless of the type of trader that you are, you need your own plan, you need your own system, your own strategy. So if, for example, my dear Agustin over here is a scalper trading in a 15 minutes chart or the 30-minute chart, he has his own plan, he has his own strategy. What I mean by that, I mean the technical indicators that he uses, and in order to identify his own entry points and exit points. So your question is very general, to be honest. So you should start with the basics, okay? So there are a lot of strategies, either intraday ones, either for long-term traders as well. So first of all, depends on what time frame you like to trade, what kind of trader you are, and then what you need to compose your own strategy that you can follow, you can understand, and it will be easy for you to identify your own entry and exit level. So yeah, the question is very general, to be honest. Reply to that. That's a bit weird, dear Gunda. Have you contacted support team? That shouldn't be the case. I mean, have you? Over here we have the. Okay. Obviously, I'm in a demo account, but okay. Let me just. Um, I want the market watch. I want my navigator. Okay. I don't know whether you can see. Oh, that's my navigator, and I want the watch. Okay. Is my market watch, right? Where I have all the assets that the company offers. You need to right click and click show all. If you click show all, you will be able to see indices, stocks, currencies. You see currencies, commodities, coffee, cotton. Um, you can see basically everything. That might be the case. Can you check, please? If not, if you're still struggling with your account, please contact our support team, because that shouldn't be the case. It's impossible not to be able to see currencies, but only indices. Okay, let us know. Okay, pound yen. Yeah, pound yen is something that I was watching yesterday as well. Very volatile asset. So what we have with pound yen in a month, daily to month. Okay, dear Chile. Yeah, fair enough. Why not? So let me just. I will keep this on. Keep this on. Keep this on. I'll keep this on as well. Okay, I need these lines, to be honest. So daily, due to the safe haven flows, okay, the safe haven flows, the situation with Ukraine, it started in the beginning of March. Remember, that's why we have seen since the beginning of March this rally, because it has to do with the safe haven flows from the fear that the Ukrainian war caused. Okay, that's why, remember, yen is being used as a safe haven asset. So that's why we've seen this rally. So, however, there was a big pullback due to there was a big pullback last week, but quickly managed to find the floor at the 160 territory. around number, triple zero number, and the asset has been supported for the last 3 days and is moving northwards above the 160. As we can see, regardless of this down leg and the correction that has been done, because this is around 50%, yes, it is. So you see, as it reverted and found the floor at the 50% at the round and the triple zero number, the 160, and rebounded since then, with momentum in the daily chart still positive. There was a slowdown, but MACD remains well above zero, with the signal line well above zero. The near-term stochastic started moving higher again. We have a bullish cross. Can you see that? Bullish cross of the stochastic over here, and it managed to move above 20, pointing higher. We have the RSI sustaining a move above 50 as well. So I will get rid of the ATR. Okay, here we are. That implies to a still positive outlook for pound yen in the daily chart. Let's have a look in the monthly chart. So a big dodgy candle over here, small body candle with a big tail downwards in the this week, but the momentum still rising. Can you see this, guys? Can you see that the MACD keeps rising and rising, ignoring these pullbacks? This looks to be just corrections or near term pullbacks. So in the weekly chart, momentum is still positive. Stochastic, near term stochastic, okay, I need to get this back to the reset properties. So, okay, give me a second. Stochastic, this 533 stochastic is the one that I'm using for the intraday analysis and not the monthly, weekly, or daily one. So I would like to have the actual. No. Where is my mark? My navigator lost again. Okay, here it is, but I just minimize it, so my bad. Oh. Stochastic. Silver 514 which is it's okay for the daily chart. So pretty much suggesting the same thing. The asset, the stochastic remains close to 80 territory. We have a bit of a pullback, but hasn't really closed 80 yet, and that is lying with this pullback that we have seen so far. So remains in track with the upwards channel. So let me connect the highs over here, so it will still remain to the upside for the time being. And you need to, dear Chili, since you're asking about daily, weekly, and monthly, it will be good for you to check how this candle close, this weekly and monthly candle closes tonight. Because if you close like that, small body candle, long tail, and a sustain and move well above the 160, this key support level, then that implies that the outlook remains positive for pound yen. However, if it breaks that level and close below it or close to it tonight, then that's a vice versa scenario. That's a totally different scenario, okay? Monthly, so has broken last month this key resistance level that it has been held for more than a year. It broke it decisively and is keep moving southwards so far in April, breaching the 168.46 high. And you can see MACD keep rising in the monthly chart, stochastic keep rising in the monthly chart. So RSI the same. So we have overall positive outlook in a monthly, weekly, and daily time frame for the time being. But it will be very significant to see tonight how this candle closes. Okay, but from fundamental perspective, pound yen is expected to continue moving upwards if we consider that Bank of Japan just yesterday morning, kept this super dovish stance as it was expected, but nonetheless um, they have announced an unlimited bond buying. So is that implies to further pressure on yen. Okay. On the flip side, with the Bank of England, things are a bit different. We were expecting to proceed with another um, rate hike this week, but nothing's really certain due to the fact that inflation is so due to the um, sorry by considering that inflation is at levels that haven't been seen since 1970. Okay, the expectations are that the Bank of England will proceed with another rate hike around 25 points next week. Okay, so that's the one thing. And this could add pressure on the pound. But here we have pound yen, so you need to consider also the interest rate differentials. So by considering the interest rate differentials, then pound remains the beneficiary currency against yen. Okay, and if they indeed the Bank of England increase once again the interest rates next week, that could give another push to pound against yen. Um, So, what else I wanted to state in regards to Bank of England? That was pretty much it. Not sure whether I'm forgetting something. So let's move on. If I reply to your question, guys, if I don't, if you need to ask something else, just stick it in the box, okay? Uh, so, hello, Brown. Hello. Uh, what do you mean, Alice? A zero spread account? Like, give us a feedback, okay? Tell us what's going on. And it's very crucial to contact support if you're facing any issues with your accounts. Please contact our team, okay? We want to know, we want to fix any problem that you are facing. So please contact support. If you enter our website, okay, if you open the Hot Forex website, on the very top of the website, you can see contact us 254, and we have a live support as well. So it's very important if you're facing any issues to either contact your account manager or the support team that they could help you with whatever you need. Thank you very much, Shahid. Guys, I have replied to we are reached to the end of the questions. So it's been just 40 minutes so far, 48 minutes so far. So are there, other than gold, Nasdaq, and pound yen, are there any assets that you want me to check um, uh, before we call it a day? I will actually check again my newsfeed to see whether anything else is going on around. No, PC is out, employment cost is out. We are done in regards to the economic data perspective. Just to warn you that next week is a really important week ahead. We are, first of all, we are entering May, new month, but it's a packed week. We have Fed, we have Bank of England, Bank of England, we have RBA, also expected to be an aggressive one, also expected to be a hawkish one. We have NFP, okay, NFP on Friday. So we have NFP, Bank of England, Fed. What am I missing? RBA, services and manufacturing PMIs as well, and unemployment rate from Europe, Germany, and Canada. So it's a very, very busy week ahead. Okay, so you need to be very careful. Okay, thank you, Abby. Thank you. You don't have anything to ask. Okay, that's fair enough. Um, so let me check whether. So what else? Okay, as we said, stocks overall remain under pressure in the medium term. That has to do mainly with aggressiveness of the Fed and in general the central banks, except the Japanese central bank and the ECB. We have seen that dollar remains on bid, a bit of a correction on the month end, on the week's end, but it has rebounded prior the data. Now is moving sideways, close to the 103 level. So we had a really sideways movement. You can see that it was the day in the daily chart. It was overbought. You can see that for 4 days in a row. So that might was just some profit taking situation on the week's end, on the month's end, and etc. But the dollar remains in a rally for more than a year now, and significant rally since the beginning of April. We haven't spoke about, other than gold, we haven't spoke about oil. So I will finish with oil if you don't have any further questions. Okay. Okay, here it is. Recovered the majority of the losses that we have seen last week, back well above the 106 level. Next resistance level for oil is the peak that we have seen in the beginning of April at 109.73. So it's been for 4 days in a row to the upside, moving above the 20 period moving average. And that has to do, the situation with Russia, the announcement that they have banned banned the supplying. They have stopped the supplying Poland and Bulgaria. They insist the payments to be done in rubles, something that the European Union doesn't accept. So in all these reports, along with the continuous headlines that we keep having from China and the concerns that the biggest consumer of oil has proceeded to Shanghai lockdown, to COVID restriction in Beijing, etc. And this is adding to the concerns that the demand will detect it, and this is something that supported so far this week oil. So the next resistance area is at 109 territory and 109.70. To the flip side, the 20 period moving average and here it is, the 102 is the immediate support level in the daily chart. But you can see that it has been in a ranging market since the end of March. So it's bouncing from 92 to 109 since the last week of March. Okay. So support and resistance levels are considered to be the upper line and the lower line of this channel, and the middle level of this channel, which lies at the 101 territory, 101 level. Okay, so ups and downs, and etc. Very neutral oil in April so far. Intraday, you can see similar as we move into the end of the day and then the end of the month and the end of the week. Sideways, sustaining though this week's gains at the 106.40 territory. So oil in general is expected to continue to be volatile since the situation in Ukraine hasn't been solved. The Chinese restrictions and the information about the COVID, etc., we keep having um, they are actually adding to the concerns about a decline in the demand from the China and etc. So all this is adding further to pretty much to the support of oil and in general the energy prices. Guys, if you don't have any further questions, I will call it a date. Okay. So as I said, okay, here it is. Dollar remains on bid. Um, uh, Stocks remain under pressure overall. We have seen, let me just check a bit. Where is it? Where is it? Where is it? Let me check a bit. I want to check a bit the bonds as well. Um, the US ones. So here it is. Let's put the. Uh, Here we are. Zoom in. So, okay. So we can see decline continues. Uh, so uh, so extending lower. That's the 10-year future extending lower. That's pretty much in line with the overall outlook and with the overall trend. Okay, so yeah, there's nothing really changed in the bonds side, in the bonds um, perspective. Yeah, so yeah, it seems that, let me get back to the, we were seeing, just to finish with something, again I will get back to dollar and we'll finish with it. As I mentioned earlier, the PC report not removed, kicked off the fear that we had since yesterday due to the GDP number, that the peak on inflation. But um, the first quarter employment cost and the fact that it rose at 1.4%, which is the highest level since 1990, is something that could keep the markets a bit cautious as we move into the end of the month. Okay, so have this in mind. So rally has stopped a bit. We've seen a bit of a pullback over here, but the asset remains anyway well above its lows. So let's wait and see. Yeah, but overall picture, as I mentioned, hasn't really changed. We might see a bit of a pressure due to the employment cost index today, but the overall outlook for dollar index is not really changed. So yeah, that's pretty much it. Let me check. No questions. Okay, guys, I will call it a date. Have a great day ahead. Take care. The markets, the US market will open in 9 minutes. Okay, so keep an eye on the stock market. And what else? See you again next week. A very volatile week is expected, as I mentioned. So yeah, take care. Have a great weekend ahead, and see you again next week. Thank you. Bye bye.